Today we'll take care of profit and loss statement and what is the role of a leader, and profit and loss statement in a very layman language, in a way where which your national manager can understand, where your marketing manager can understand, where your product manager can understand, because they don't want to deep dive deep into the profit loss and statement. So any profit and loss statement, which we call as a P&L statement, start from the revenue, which is called income. Income, again, there can be a confusion. Other income, you add it. If there is something which is going as a discount, another thing, you minus it. Finally, the net income is something which is required. So first thing after the income, which comes, is called cost of goods sold. The cost of good sold, which is required, or which has been there for that kind of income which you have taken and captured in a profit and loss statement in your division. So cost of goods sold should be relevant to that income which you have captured. So if you minus cost of goods sold from the revenue, what comes is called gross margin. Gross margin become KPI for many of the product managers. Gross margin become a KPI for many of the supply chain guys, because how you're going to enhance the gross margin, how you're going to increase the gross margin, only by reducing the cost of goods sold. Therefore, you have to negotiate with the vendors to get a raw material on a cheaper cost or maybe economical cost. You have to look for different vendor for the supply. And at the product management level, you have to work on the product mix so that your sales team sell more products which has got a better gross margin. Therefore, if you see in most of the organization, the gross margin targets are being given to the product manager or group product manager or even up to the marketing manager level. In many multinational companies which has got multiple division, the EBITDA is only at the MD level. At the BU head level, the KPIs are related to the gross margin. So gross margin is a critical line item for any leader to focus and to increase it. After the gross margin comes OPEX. OPEX is nothing but operating expense. The operation which is required to generate that kind of revenue, whether it's your marketing cost, whether it's your electricity cost, whether it's your manpower cost, whether your material cost, whether your logistic cost, courier cost, all the operating expense comes into this OPEX part of it. Now, as a leader, what you have to do is you have to manage the cost. So if you want to improve the profitability, either you increase the sales or you reduce or optimize the cost. Now in cost, you have to, as a smart leader, you have to work on the cost which is taking too much of expenses, or which is impacting, creating pressure more on your P&L. Most of the lease line item are being compared to the sales in terms of percentage. So most of the people will ask you, okay, how much is manpower? They don't ask what is absolute value. If they're spending 20 million, 30 million, they will ask what is the manpower percentage to sales. And then you will say my manpower cost is around 25% or 18% or 19%, which means whenever you have to speak about these expenses line item, it should be in percentage. Number two is you have to work upon certain line item which is really creating pressure. One can be manpower. If you see, a lot of layoffs are happening across. Why layoffs are happening? Because they feel like the kind of manpower what they have is not required to generate that kind of revenue. Or if you see, or if you hear, at least in the life science, I've heard for long, the organization is going flat. So they are reducing the layer of hierarchy which we have created. Maybe sales managers are not required, maybe regional managers are not required. Another one what you have heard is they are going for enhancing the span of control. Today somebody who is managing 3 will manage a 6, because one individual can manage up to between 6 to 9 team members. So if the span control is increased, obviously we require less number of managers. So again, another way to reduce the manpower. So as a leader, you need to figure out where your manpower is, what is the right size for the organization to generate that kind of revenue, and continuously you have to work upon it. And there are many line items which you need to figure out, saving the cost. The logistic cost you have to benchmark with the industry. For example, when I was in life science industry, we were saying logistic cost cannot be more than 3%, and therefore you have to find the alternate way of logistic. You have to find alternate way of transportation. Whether you want to send everything from the premium logistic companies, answer can be yes, if it is a very, very sensitive product. But if the sensitive product is not there, you can find the alternate which is also as reliable as the bigger one, but you can save the cost. So you have to benchmark. The first thing is all OPEX line item is always in percentage. They ask question about percentage. When you go for interview, they will ask what is your manpower cost, what is your material cost, what is your logistic cost. Secondly is to really figure it out whether it's high or low. You can take the benchmark. And thirdly, you have to always keep on focusing that at least in this competitive environment, manpower cost, material cost, logistic cost cannot be high. So if you want to control your expenses, this is the bucket which you have to really work upon it. Now, if you minus OPEX from the gross margin, what has comes which is called EBITDA, which is your earning before interest, tax, depreciation and amortization. Most of the organization at SBU level, you have a target for EBITDA. EBITDA should be that, EBITDA should be this much, EBITDA is low, EBITDA is high. For example, we come from diagnostic industry. If you see most of the listed company, their EBITDA is between 25 to 27%, and the organization which are putting a lot of pressure on manpower, expanding in a growth phase, their EBITDA is 16 to 18%. So finally, what as a leader you have to do is you have to benchmark with the best and try to move your EBITDA towards the best, which means if your EBITDA is 18%, you have to take it to 25%. What could be your strategy? First can be how to increase revenue. What could be a strategy? How to improve your gross margin. What could be a strategy is how to reduce the OPEX. And after that, it's a sequence. So after EBITDA, if you minus depreciation and amortization, what you get is EBIT. If you really give the interest out of it, what is left out is profit before tax. If you pay tax, what is left out is profit after tax. So in a sequence, which again I'm repeating from starting from income, cost of goods sold. If you minus cost of goods sold, what is left is gross margin. You have to work on gross margin. Then OPEX, which is operating expense. If you minus operating expense, what you get is EBITDA. After EBITDA, you have to minus depreciation, amortization. What you get is EBIT. And after EBIT, if you pay interest, what is left out is profit before tax. And if you pay tax, is profit after tax. Depending on your organization, nature of organization, the operation of your organization, everybody has got different KPIs. Some organization work on PAT level. The MD has to work on PAT. The PAT has to be improved. Some organization work on EBITDA level. Some organization has got MD which work on EBITDA level, and they give you a target on gross margin level. Two things remember. One is every line items being taken in terms of percentage. Nobody will ask you whether your PAT is 2 crore or 3 crore, 6 crore. What they ask is what is percentage of PAT? How much is your net margin? How much is your gross margin? How much is your operating profit? Another thing what you remember is operating profit is nothing but profit coming from operation, which is your EBITDA. So the KPI which is very well defined is always in terms of percentage. As a leader, your role is pretty simple for your team. Product management and national sales manager will work on gross margin and product mix, and how to really renegotiate with the vendor. Supply chain can also play a role. OPEX is where you have to get involved, define the right hierarchy, define the right size of the organization, define the right span of control of your people so that expenses can be controlled. A lot of people are going for assetless model. You have to control your rent unnecessarily. The space should not be there unutilized. The capacity utilization of warehouses should also be seen properly. So there are many things which is related to OPEX which you can work upon it to reduce the cost. And once you reduce the cost, EBITDA will be high. Then you have to see whether interest, something which has loan has to be cleared, or you want to keep that interest. And tax you can't do much. So rest all is nothing but the outcome of calculation. So your entire journey or entire decision making is in the first two bracket, which is how to reduce the cost of goods sold and how to reduce the OPEX. And obviously as an organization, these two you have to work, but parallelly you also have to work how to increase the revenue. So your entire journey is how to increase the revenue and how to reduce the cost. If you balance this, your organization will be profitable. Hopefully it makes sense to you. If required, I will cover balance sheet in the next video. But this is what the layman, what a national manager, he's not a layman, but in a layman language, he can understand the profit and loss statement. Thank you very much.